Why has Zurich Insurance launched the Zurich Climate Prize, and how is the prize related to Zurich's core business?
At Zurich, helping our clients to better understand and protect themselves from risk is our mission. We have recently identified in a report together with the World Economic Forum that climate change is one of the biggest risks out there. So the Zurich Climate Prize is a great opportunity to raise awareness about the risks of climate change, but also to foster innovative solutions to help tackle climate change and related issues like flood, which is another very important topic for Zurich.
The subtitle of this year's St.Gallen Forum for Renewable Energies is David Meets Goliath, referring to the complementary role of existing firms and new entrants in the energy transition. How do you balance the risks and opportunities of energy incumbents and new firms in your investment strategy?
Well, as an insurance investment manager, we tend to be more of a conservative investor, taking a very structured approach at building our portfolio relative to our insurance liabilities. So generally speaking, we would not invest a lot of our money into venture capital, into highly risky ventures. We tend to be more on the side of more established risks, more established companies. And so I think for the future of the renewable energy and energy efficiency space, it is really important that investors such as ourselves learn more about the risks and opportunities involved with clean tech, with renewable energies, so that we can become more comfortable with taking these risks.
In his presentation today, Professor Wüstenhagen referred to the idea of a carbon bubble in financial markets, which means the systematic risk that may result from a devaluation of fossil fuel firms in a carbon-constrained world. How does Zurich manage those emerging carbon risks?
One thing is very clear. Climate change will have a substantial impact on our investment portfolio. However, the way in which climate change over time will impact the financial bottom line of the companies in which we invest is very complex and very complicated. What we want to make sure is that our portfolio managers are well equipped to take these type of risks into account. For instance, when they invest into companies whose business models are linked to fossil fuel generation. And to do that, we need to make sure that portfolio managers are well trained, have access to all the relevant information about environmental and other challenges, have a process that reflects those types of risks, and last but not least, that they are also active owners and bring these topics up when they speak to the management of our investee companies.